In the quarterly earnings report, HP posted a big gain in net income, which was up 121% to $1.4 billion. But revenue fell 3% in the quarter to just over $29 billion. Digging deeper into the numbers, sales posted slight gains in the enterprise group, but sales fell in many areas, including the PC, printing, and software businesses. Still, the stock is trading higher, and after hours, our editor-at-large, Corey Johnson, has been combing through the numbers, and he's here now with today's drill down. So a bit mixed, but that's better than all bad, right?
Well, first let's put some context on the net income number. Yes, it was 100-some% over last year, but last year was the train wreck quarter where they announced an $8 billion write-down of the autonomy purchase, an investigation for accounting fraud. So any comparison to last year is going to look good. If you strip out those one-time items, though, this was a quarter that was smaller in terms of earnings by a lot, by about 13%, in revenue, as you mentioned, down. If you look at what the stock's done since Meg Whitman took over for the company, it has indeed been a bumpy ride, but of late it's been straight up and to the right. Now, again, since Meg Whitman took over, stock's up about 5%. But in the last year, the stock is up, if you include today's after-hour gains, nearly 100%, which is fairly amazing. But the business continues to shrink.
Why is that?
Because they're selling less stuff. Oh, that's...
No, why is the stock up?
The stock is up because I think people are looking forward and saying the worst is over. They've put their problems behind them, and people just want to buy stocks right now. But what we've seen from the business, again, is that the shrinkage continues here. We're down 3% year over year, but this is, I think, more than 6 quarters of consecutive declines in this business. And one of the biggest problems there is PCs, all right? It's a broken record, but these guys, even though they're gaining share in the PC business, it's still a smaller and smaller business every single quarter. They are stuck with a crummy business that is selling PCs.
So what about software? That's hardware.
Software important, enterprise important. Their software business has, they've put a lot of investment in this, right? They've done billions in acquisitions in software. And yet the software business, well, enterprise sales, exactly, more than that. Well, so enterprise is a different thing. And enterprise actually ticked up a little bit in the quarter, and that was good for them. But yeah, their software business, really disappointing. I mean, down 9% year over year in the software business. So this is an area where they thought they were going to pick up some strength. They thought they were going to have some success with their database business. But you've had 3 of the last 4 quarters have seen year-over-year declines in the software business. So things are tough over there at HP.
What about servers?
The server business picked up a little bit in the quarter. That was that enterprise group, and that was good for them.
They're betting big on servers.
They're betting big in the places that look. Last week I was at the Amazon Web Services conference, and I got to thinking about all these bad numbers we're seeing from Cisco, from IBM, from Oracle. Oracle, the only one that's growing, and that's also with lots of acquisitions and barely single-digit growth there. And I think what's happening is a lot of businesses are moving to the cloud. And fundamentally, while HP is selling stuff into the cloud, they're not selling as much. It's not every company building their own IT infrastructure. There are a lot of companies turning to the cloud and therefore spending less.